Are private investments really as safe as they seem? The CEO of Strategic Wealth Partners just issued a stark warning about growing liquidity risks that could catch even seasoned investors off guard. If you've put your money into private alternatives, what you don't know about accessing your cash could cost you big. Today, we break it all down. Welcome to USA Latest Update, your trusted source for breaking political news, powerful analysis, and the stories shaping America's future. From Capitol Hill decisions to major global developments, we bring you the facts, the context, and the impact, all in one place. If you want real updates without the noise, you're in the right place. Let's dive into today's big story. Private alternatives, including private equity, venture capital, real estate funds, and hedge fund strategies, often promise significant gains over public markets. Yet unlike stocks or mutual funds, these investments are not traded on public exchanges. This means that converting your investment into cash can be difficult, sometimes taking months or even years. The CEO emphasized that investors must carefully weigh these risks against potential rewards, especially in volatile economic conditions. One of the key points raised was the mismatch between investor expectations and the realities of private markets. Many individuals are drawn to private alternatives because of historically high returns and the perception of exclusivity. However, the CEO stressed that liquidity should not be an afterthought. In times of market stress or personal financial need, the inability to access funds quickly can create serious problems. He urged investors to consider whether they truly understand the terms of their investments and the mechanisms by which capital can be returned. The CEO also highlighted that liquidity risk is often underestimated in financial planning discussions. Advisors and fund managers may focus heavily on potential gains, performance history, or diversification benefits, but neglect to fully explain how locked-in capital works and under what conditions withdrawals may be allowed. Investors who do not account for this can find themselves exposed to situations where they cannot sell or redeem their holdings at a desired time, which can impact both personal finances and broader portfolio strategies. In addition to liquidity concerns, the CEO touched on broader market implications. As more investors allocate significant portions of their wealth to private alternatives, the overall market becomes more interconnected and potentially fragile. A sudden need for liquidity by multiple investors or institutions can create pressure points, particularly in sectors where assets are illiquid by nature. This is a point of caution, not alarm, but it underscores the importance of understanding how private alternatives fit within a well-rounded financial plan. The warning also comes at a time when economic uncertainty is growing. With inflation, interest rate fluctuations, and global market volatility, investors are increasingly paying attention to the risks embedded in all parts of their portfolios. Private alternatives, while lucrative, are not immune to these forces. In fact, the CEO suggested that illiquid assets may amplify risk in times of economic stress, making strategic planning and risk assessment even more critical. For investors looking to enter private markets, the CEO offered several practical recommendations. First, do your homework. Understand the structure of the investment, the expected timeline for returns, and the conditions under which capital can be withdrawn. Second, diversify. Even within private alternatives, spreading investments across multiple strategies or sectors can help mitigate some of the inherent risks. Third, maintain an appropriate balance of liquid and illiquid assets in your overall portfolio. Having sufficient liquidity in other areas can provide a safety net in case private investments cannot be accessed immediately. Another important aspect highlighted was transparency and communication with fund managers. Investors should feel comfortable asking questions about exit strategies, fund performance, fees, and any clauses that may restrict access to capital. A proactive approach can prevent unpleasant surprises and help align expectations with reality. While the CEO's remarks were cautionary, they were not meant to discourage investment in private alternatives altogether. On the contrary, these opportunities can remain a valuable part of a diversified strategy. The message is simply that understanding liquidity risk and planning accordingly is essential. By approaching private investments with knowledge, discipline, and realistic expectations, investors can take advantage of potential rewards while minimizing unnecessary risks. In conclusion, as private alternatives continue to gain popularity among sophisticated investors, awareness of liquidity concerns becomes more critical than ever. The insights from Strategic Wealth Partners CEO serve as a timely reminder that while chasing higher returns can be appealing, the ability to access funds when needed is a cornerstone of responsible investing. For anyone considering private alternatives, careful research, strategic planning, and clear communication with advisors can make the difference between a successful investment experience and one fraught with unexpected challenges. By keeping liquidity top of mind, investors can pursue growth opportunities with confidence, knowing they are prepared for both opportunities and obstacles along the way. If you want, I can also create a perfect 20-30-second hook and thumbnail lines specifically for this video to maximize click-through and watch retention. Do you want me to do that next? Thank you for watching USA Latest Update. If you found this report informative and valuable, make sure to hit that like button, share this video, and don't forget to subscribe to USA Latest Update for the latest political news and breaking updates from across America. Turn on the notification bell so you never miss an important story. Stay informed, stay aware, and we'll see you in the next update.